So a little bit of respite for the currency volatility we've seen would, be welcome. But, Bell mentioned it. We have oil prices about 30% off the lows. We have other commodities being affected by everything from climate to weather to labour market unrest. How much does that potentially complicate the picture for policymakers?
Oh, no, I think it does. The dollar's stronger, their own currencies are weaker, and commodities are a little bit all over the place. Although the fact that we've been getting supply reductions in oil and that's keeping the oil price up, I suspect policymakers are still generally on that, well, if we need to do something, it's probably going to need to tighten. And so they're, the RBA, for instance, on hold, but still sounding like if they do anything in the short term, it would be to have to hike rates.
What about the PBOC? Or I should say, what is the rest of the world looking for out of China? Because we've had this piecemeal, policy support. I guess we'll see if the property market has truly stabilised. But it seems like structurally there's a lot more pain ahead for this economy that has, for so long, been, the engine of global growth.
Absolutely. I think what you're looking for depends on your perspective. For me, if we can get some stability in the economy and China's growing in a more stable fashion, I think that will be a very strong outcome. Some people are arguing you can get actually a renewed upswing in China that extends off into the horizon. And I don't think that's the case. I think there are some serious structural challenges which are going to keep Chinese growth much weaker. But the data last week does say that actually the easing steps that have been delivered, and there have been probably more than 200 individual easing measures, they just haven't been the traditional cutting interest rates and spending more fiscal money. They've been a different style of easing. There's some evidence we're starting to see that actually the economy is starting to stabilise, and look, I think that would be a good outcome and help rebalance the currency story, because of course it's been hurt by this weaker China and stronger US side, and I think on the China side we're at least starting to see some stabilisation.
Yeah, I mean, as an economist, would you be doing something else? There certainly is an argument for direct household payments, given that we know that households have been so affected by the downturn in property.
Look, I think the first position is kind of what can you realistically achieve, and as I said, there is a school of thought that a lot of what bedevils China can be resolved by policy. I don't think that's right. The population is now...
You think it's structural, not...
The population's now shrinking. GDP per capita is nearly $20,000. It's a middle-income economy. Debt is 297% of GDP on the BIS's numbers. The combination of those three things we should expect is going to result in structurally slower growth. So policy, I think, can make a difference at the margin. If China tries to grow really quickly, I'm sure it could do that for 6, 12, 18 months, but then I suspect it would fall back to that slower baseline.
Not surprising, given the structural issues, we have been really hearing much more about the potential Japanification of China, right? When it comes to Japan itself, how are those structural issues working out with the BOJ's ultra-easy policy, and will that change?
Well, in fact, you don't have to... Of course, there's the Japanification story, but even the US in the last 100 years, as it's become wealthier, the rate of economic growth has slowed. So we don't need to, I guess, raise the spectre of Japan. But for the BOJ, I suppose the outstanding policy statement at the moment really is this commitment from them to deliver further easing if it's required. That seems increasingly redundant. I don't know that anybody expects that there's risk of, or meaningful risk of, further easing in Japan. Obviously, the question is, when will they start to tighten policy, if in fact they will? And I suspect it's not this year.
Will they take into account the weakness of the yen that we've been seeing?
I think so. I think they'll view the weakness in the yen as something which is perhaps helping inflation but is not necessarily a permanent influence. Obviously, there's been a global inflation pulse which has been helping inflation in Japan rise, but again is not necessarily a permanent influence. I think they really want to see that inflation, the economy is operating on a different pulse, and there's more domestically generated inflation in Japan.